Shri Ganeshaya Namaha.
Lesson is on concepts and conventions. To understand the accounting and its process, there are certain principles and practices are also in picture. Those should be understood. Those are concepts and conventions. These concepts and conventions are known as generally accepted accounting principles. GAAP. It consists of two. One is concepts, another is conventions. Let us discuss one by one the concepts and conventions. Here the concepts are money measurement, accrual concept, dual aspect concept, realization, cost concept, going concern concept, entity and matching. However, there are no hard and fast rule to study these concepts. There is no specific order. But to memorize easily these concepts, there is an acronym that one could understand, can easily memorize. This acronym can easily gives an idea and easily understood. Let us have a discussion on all these concepts one by one. So, the first one is money measurement. According to this concept, any transaction which can be measurable in monetary terms are only be considered by accounting. If a transaction doesn't involve any monetary concept, it cannot be considered by accounting. Take for instance, if a service delivered by the doctor without expecting any money from the patient, that transaction or the event cannot be considered. So whatever the transaction which can be measurable in monetary terms are only be considered. That is the basic principle of accounting. Then accrual concept. Here, whenever various transactions are there should not be what we call imagination. An event which is taken place, its actual position is to be considered. Say for instance, a credit sale is made where money is not a transaction. If money is transacted, then naturally be recorded immediately. On the other hand, if the money is even though not transacted, goods transacted from seller to the purchaser should be considered. If the money is paid by the purchaser later, it should be recorded. So, it's simple to say, whenever, even if they not yet settled the settlement due, that transaction should be considered. So, that is the concept under accrual concept. Then, dual aspect. Every transaction consists of two parts. One gives benefit to the business, another takes away benefit from the business. On this dual aspect, one format of practice of accounting is in known as a double entry system. There, the concept will be well understood. The next one, realization. Here, realization means while recording the transaction, there should not be imagination of the event. Say for instance, if the goods are produced, naturally, normally assumption is made sales. But in accounting, whenever the goods are produced and whenever the goods are sold, are to be observed. Say out of a particular production quantity, some extent of the product is sold, to that extent the sales which are made are only be considered as sales. Here one should not assume that entire production is sold. Then cost concept. While recording the transactions, at what cost the particular transaction was made, that should only be considered. There should not be imaginative profits. Escalation of the cost is not allowed. Say for instance a building purchased for 10,000 rupees. It should be recorded the 10,000 rupees, whereas its market value or escalated value or assumed values shall not be taken into account. Then going concern. Going concern is an assumption that business will continue and the business will be continued for foreseeable period. So while recording the transaction, account assumes that business will continue. Here to understand this concept, whenever a particular accounting period is considered, on particular period the accounts are assuming or assessed to derive the results of the business. It doesn't mean the business will be closed. It will also be continued. Likewise, whenever the goods are sold on credit, there is an assumption business will continue for the future. With that assumption only, what you call the transaction is considered and accordingly accounting works. The next one is the entity. This is very most important entity concept one could understand and also sometimes may be given confusion. Business has separate entity just like an individual. It can be sued by others and sue the others. So business just like any other individuals or any existence element, it should have an existence. Whenever the goods are purchased, it is recorded business purchased the goods. Whenever the goods are sold, it is also considered the goods are sold by the business. Here, one more confusion element in this angle is owner. The status of the owner from accounting is, which is different from the business. Even if the owner, invested, operated the business, from accounting point of view, owner is different from business. In case owner made an investment of cash, it is investment by the owner. Business owes to the business owner. In case owner takes away the business for cash, it is the amount recoverable from the owner. So with such a view, the accounts are recorded. So that, simply to say, the owner's personal transactions, business transactions are viewed separately. Then matching concept. Under this concept, the accounting tries to always match the income and expenditure during the period. Of course, ultimately it gives the result of the business, either profit or loss. So, having understood all these, again, one could understand, memorize these concepts: MAD, RC, JUMP. So this acronym helps you a lot to understand and the concepts. The other part is conventions. Conventions are nothing but the practices of accountants while they are preparing accounts. The first one, the consistency. Consistency means while writing the accounts, recording the transactions, every accountant should follow a same set of practices. See, let us take an example of accounting period consideration. In case, normally, whatever the accounting period taken for the previous period shall be continued this one. Otherwise, it should be mentioned rather giving confusion to the reader. And then disclosure. Whatever the transactions are recorded, the ultimate objective should be fulfilled by the accounting. So whatever the interested parties, stakeholders should have the information, so that soon after preparation of the accounts must be disclosed to the relevant parties. Then relevancy. So not only recording the transactions in the books, the relevant proofs shall also be maintained by the accountant, called files, whatever you may form. So if the proof of the expenditure, proof of receipt is maintained, then only relevancy is exists. Otherwise, it may mislead to the reader or the follower. Then conservatism or conservation. See here, while recording the transactions, actual pictures should be presented. No inflated prices, no imaginary profits should be recorded, and accordingly the results will be mislead the what's called interpretation of the results. So in this manner, the concepts and conventions which gives an idea to throw some light to the how accounting works can easily understood the accounting if one could go through this gap. With this, the lecture on the general accounting principles is completed, and then further details you can go through the blog.